afternoon, everyone, and happy Friday. Welcome to Stock Market Today. Alyssa Corman, Ed Carson here with a look at today's action and what we saw in the market this week, and really finishing Friday on a high note, Ed. So strength for the three major indexes, the Nasdaq gaining 0.8%, same for the S&P 500, and the Dow up 0.4%. Small caps lagging a bit, but we'll get to that. But the strength in big cap tech definitely notable today.
Yeah, we definitely saw some of those waking up this week, and today we had Google and Apple continue to make powerful moves. But on the downside, Digital Turbine was one of those growth names that had really nasty sell-offs late in the week.
Yeah, so we saw buying opportunities, but also sell signals present themselves. But first, let's take a look at the major indexes. Here we have the Nasdaq on Thinkorswim from TD Ameritrade. So we saw some quiet action midweek, but breaking out to even more new highs by the end of the weekend.
Yeah, it was just really strong. We've continued this trend. We've really left this consolidation behind, certainly on the Nasdaq and I think on the S&P. So, I mean, it's not surprising. This is the kind of thing you want. I mean, when you have the wind at your back, that's when most stocks are generally going to be moving higher. As we'll get to, it doesn't always work with all stocks, but it's definitely a positive sign. It just makes it so much easier to be going with the wind instead of against it.
Yeah, and then taking a look at the Nasdaq on a weekly, we can see a gain of about 2%. So a nice strong gain for the week. So two strong weeks in a row here. And as you've pointed out previously, the couple of red weeks that we've seen really have been mild. So building on the strength that we've seen for the Nasdaq.
Yeah, it's just it makes it easier. I mean, there's some shakeouts, which is sort of nice, but building gains. If you can get into some of these things as we were starting to strengthen, generally they're seeing some nice positive action throughout here in the Nasdaq. Growth has been leading, but it is a broad-based rally in many ways. So that's a really positive mix for the market. A nice change from several weeks ago.
Yeah, and it looks like the Nasdaq finished Friday about 5.4% above the 50-day moving average. So if we continue higher next week, maybe we might start getting into that kind of extended territory.
Yeah, we start getting a little bit concerned when it gets to be 6% extended or so. We definitely saw at various places over here where it can get a more extended from that. It can do that for a while. I mean, there might be little things. It just means that the risks will pull back are higher and that the risks that the pullback will be greater if and when it happens. But as Justin Nielsen, our head of market research, said the other day, was pointing out, well, it's sort of a new rally almost, especially for the Nasdaq. And early in a rally, you sort of expect a bit of power. So it's a little bit more acceptable to see the Nasdaq or an index get extended in that situation. So don't be worried about it yet, but it's just something to watch, especially if we continue moving higher.
Yeah, a little bit of room there. Okay, well, now let's flip on over and take a look at the S&P 500. We're going to stay on Thinkorswim to be able to take a look at those candlesticks for the S&P as well. We have our regression lines, and it's been a little while since we've been in the middle of this regression channel, and it looks like we're now finally getting close to being back to that center regression line.
Yeah, on a daily, it's like, so you can see this strength that it had been sort of weak for a while. We went through this trough, and maybe we'll come up with a new regression line, but it's definitely, you can see, it just sort of had this sort of flattish area for a while, and now we're moving back up. It's just the positive trend there. Obviously, look, when you have the mega caps of the $5 trillion stocks and the $2 trillion stocks all having sizable weekly gains, it's pretty hard for the big cap indexes not to have a solid week.
Right, you are, Ed. And now let's go ahead and take a look at the Dow, which hasn't been quite as strong as the Nasdaq and the S&P 500, but notable today in that it hit a closing high.
Yeah, so that was nice. And you can see there's been a pretty strong uptrend ever since it came down here. It's actually been doing pretty darn well. Apple and Microsoft are components, but it actually shook off some bad individual news for IBM and Boeing. So a nice gain here. It's essentially at highs. We're just seeing that strength across the board, at least in the big cap names.
Yeah. So small caps, though, lagging a bit, and we can pull up IWM, the Russell 2000 ETF, down 1.3% for the week. And so small caps, a little under pressure, perhaps here, Ed. And so you talked about the strength in the big cap tech names, but what about the breadth in this market? It sounds like we've been talking about that narrowing.
There has been some narrowing. If you look on things like the Nasdaq advanced decline line or NYSE advanced decline line, at the very least, they're not increasing given, and you would expect that given that the market's moving up and given that so much of the weight is in the big cap tech. So that can mask some weakness, and so that's a little concerning. I mean, it definitely is. Not everything is moving up. While the big cap indexes are moving up, small caps didn't have a great week. Not terrible. You look at this, look, it could easily break out to a new high with some stuff, though. And you can see the relative strength line here. So there were those pockets of weakness that have developed over the last few weeks. We saw some growth leaders that were either well extended from breakouts or rebounding deep from lows, and some of those stocks came out under a lot of pressure.
Well, you mentioned Google and Apple, so we can take a look at those stocks. So GOOGL, Alphabet there, a nice gain to finish the week, up 2.3%. It looked like a strong move. We'd been waiting for this kind of thing because Google's really just been hanging out somewhat quietly right around highs, and seeing this strong move is a positive sign.
Yeah, you could almost argue this is almost the real breakout because it's sort of been nudging into this buy zone, trading there for a while. And so it finally really moved. Now, the volume wasn't tremendous, but, it was better than the prior few days. There's a lot to like about it. The RS line is at new highs, or essentially at new highs. So this has been doing really well. Growth is accelerating. Yeah, some of that might be easy comparisons, but not entirely. So there's this one has made a really, really nice move. Maybe you could have done early buy point here somewhere off of this rebound, but this was sort of signaling actionable today in a way that it really hadn't in the prior couple of weeks.
But you did point out weak volume, and that's the same issue that we saw with the breakout for Apple today. It gained 2%, clearing a cup buy point at 137.17, and volume kind of dry on the right side of the base, but also with this breakout as well. Although I guess you could argue that at least volume was a bit stronger today than it had been tracking over the past couple of weeks.
Yeah, I'll be honest, the last time I had really looked at Apple's volume, it was about an hour ago, and that volume did not look as strong. I mean, obviously there's the end of the day, but it did pick up. So it's the best volume in a little while. So that's something, so that's nice. But otherwise sort of anemic, finally clearing above that. The RS line still not in consolidation highs, and it's well off, even, 2021 highs and the all-time highs from last year. So not too excited about this one, but nonetheless, it is, it is actionable. It's picking up steam. Maybe it'll have a run here. And it's definitely something to pay attention to because it is driving the major markets.
Yeah, there's a reason why we look at stocks that are breaking out, especially when you've got names like Apple and Google breaking out, worth analyzing. But it wasn't all rosy in the market. We did have a couple of notable decliners, including Digital Turbine, ticker there is APPS. We had pointed out an early entry for this stock when it bounced higher off of its 50-day line on 622, but capping off the week with on a really sour note here, down about 13%, heavy volume, round tripping those gains from that early entry.
Yeah, and look, I didn't see news earlier on this. We were looking at this even on IBD Live when it was down only 10% or only 8%. This was really intense, and that volume was enormous. I mean, this one has really negative action. Sometimes there isn't news or isn't news that's readily apparent. This is a risk, especially when you buy. This stock had run up quite a bit, and so while there was sort of an aggressive buy point here, and it might have worked, but you just have to be ready to sell. I mean, it's like that's, they don't always work, and you have to just simply follow your rules in those situations. It's unfortunate, It happens to all of us. But there was definitely, this was not the only one. There were plenty of stocks that either coming off lows or were well in new high ground that had some negative selling, often on no news.
So even though the stock isn't well below its 50-day line, you still have to consider where you got into the stock and your percentage loss at this point. That trumps it being still right around its 50-day line.
Yeah, that's really a pretty damaging loss. And, it's like that's, if you're down 7-8% from where you bought it, you really need to sell. And that heavy volume is scary as well. I mean, and just have to see in that situation, this could bounce back and there may be other opportunities. The thing is, it's not to try to hope for the lowest price possible. It's like what you're trying to do is get the best odds. So if this comes around and shapes up again, it might provide a better buying opportunity, even though that may be at a much higher price. But you just don't know if this is going to rebound at all, or if it's going to keep on sinking back towards, its recent lows.
That's exactly right, Ed. So when it comes to our battle plan for the week ahead, what would be something good for investors to do over the long holiday weekend? We've been focusing on looking at changes in industry group strength. So there's been a notable pickup in software groups, also some medical names, even commercial services staffing. So maybe try to spot some of these other trends that we're seeing with groups moving up the rank. Internet content, another one that comes to mind.
Yeah, there's a lot of good groups out there. There's a lot of stocks for setting up. I mean, while some of these growth names like digital apps, somebody had really big sell-offs, there's others like Shopify that had modest blocks. And then they're forming sort of new entries after running up towards highs, or apparel retailers that are looking strong, holding right around buy points. A lot of the groups you were talking about. So there's a lot to look at. You want to have that on your watch list at the very least, just so you're paying attention to it. And I think this week also shows why you don't want to be too concentrated in one particular stock or even a sector. I mean, it's one thing if like Digital Turbine or one of these others is, a half position and, or a 1 out of 10 stocks. If it's a 40% position in your portfolio, that's a totally different matter. So, you just want to be considered, diversify your leaders a little bit, make sure, you're not putting it all in one basket, because it's not a set it and forget it kind of market. That's for sure. I mean, it's definitely, you need to be paying attention to your buy and sell rules. Don't get buy extended. Don't, just be looking at all those situations. Yeah, you got to be disciplined in this market. It's a market you can make money in, but it's definitely one you can't be fooling around with.
And maybe balance out some of those high octane IPOs with more of the long-term leader style of stocks.
There's a lot of stocks. There's a lot of stocks. I mean, Microsoft is a long-term leader. Google's a long-term leader. And there's others like Pool, there's EPAM. There's some stocks like, oh, they're so boring. All they do is go up, on, up, and up and up. I mean, it's like you look at some of these on a monthly chart and you go, oh, wow, I'd love to have that. And it does balance out. It's nice for your blood pressure also as well, to have some of those names.
All right. Thanks for that, Ed. We hope you all have a great 4th of July weekend. The team will see you back here on Tuesday for more. I will be joined by David Ryan on IBD Live, and we're looking forward to that. We hope you join us, investors.com/IBD Live. Thanks again, everyone. See you on Tuesday.